Man, this is the crew of the hour right here. I'll tell you what, is there a more important topic in mortgage right now than AI? Probably not. Brian Vieaux, president of MISMO. Good to see you, my friend.
Great to be here, Greg. Thanks for having me back.
Yeah. Dan Sugg, chief mortgage lending officer at Michigan First Credit Union. Also, the chairman of the Residential Board of Governors, otherwise known as RESBOG. Good to see you, my friend. Last time I saw you, we were playing in that teepee behind you. No, I'm just kidding. Last time I saw you, you were giving me a ride from the airport from, I think it was in Florida. Yeah.
Yeah, we were at Brian's conference, MISMO conference, and thanks for having me. Great to be here.
Yeah, well, it's good to see you guys. This is such an important topic. On Wednesday of last week, the NBA published a new white paper examining how existing federal laws and regulations apply to the use of AI in mortgage lending. And I'm just so happy that the NBA is tackling this topic, because I don't know how many man hours or how much it would cost to get a good solid footing underneath us on this topic. So, Brian, let's just dive right into this. What is this white paper all about, and why should every mortgage executive and compliance person have their ears perked for this one?
Yeah, I mean, there's like you said, there's a lot to cover, and this is the topic du jour, whether it's AI that people are talking about for productivity gains and efficiency and all that. But there's a big piece of AI that people haven't been talking about, and that's the governance side of it. And we've seen Fannie and Freddie issue their guidance, their language in their seller bulletins and the seller guide that really puts the onus on the seller servicer for anything in that loan that had AI touching it, whether it was directly by the lender through their own use of AI in their shop, or indirectly through a vendor that lender uses. So that's one important aspect that's kind of spelled out and called out in the white paper. The other thing, and Dan, I know this is a big topic within RESBOG. A big part of the white paper gets into this topic, this concept of AI originating a loan versus the human originating a loan, right? And my take, I'll preface that by, this is not the opinion of anybody other than myself. So it's not a MISMO opinion or an MBA opinion or anything other than mine. My take, the way I read all of the regulations out there, a human with an NMLS number is required to do any mortgage origination tasks as defined, right? And we see and hear lenders out there that are talking about what they're doing with AI at the top of the funnel all the way through loan origination. And I would encourage people to spend a little bit of time on this part of the white paper and think about how it applies to your business. Let's say you're using, agentic AI in that origination process, and 300 loans in a given month are closed and roll up to a single human loan officer. What's the likelihood that human loan officer was able to do something meaningful and interact with all 300 of those consumers in that given month? Probably pretty low. And that on the surface is not the issue. The potential issue are UDAP issues. Was the consumer aware that there was no human involved in this case? And Greg, I know you've got some experience with, agents, bots, and whether or not the disclosures were accurate. So I think the white paper produced by MBA, published by MBA, done by Oric, really sheds a light on some areas of risk that lenders just need to focus on.
Dan, when did you guys start taking a look at this inside of RESBOG?
Yeah, it was last June. One of the priorities that RESBOG brought forth was AI, and it was born just out of what Brian just said. It was like, who's doing this? And I think it started for me in October of 24 when I went to Annual and I saw, some new vendors there. And it's funny to see the delineation of this information. AI has been popping up in these show booths for the last few years. And every year it's like a couple booths, and then it's 10 booths. And now pretty much everybody advertises AI, and whether it's a CRM or whatever it might be, pricing engine. And ultimately, a few of them I talked to, because we had very early adoption at the credit union for AI, and we had a digital first mindset. So I started talking to the vendors, and I realized that the newest entrants into this industry were not mortgage people. They were coming from the medical field. They were coming from builder fields, people with this great technology trying to apply it to our business and remove the cost out of our business, or certainly try to remove the cost and build this automation. So we had people, developing software that had no idea of the compliance side of it. So we did really two things at RESBOG. We brought it to the forefront and said, this has to be one of our top priorities. So it made the list of 3 last year. And out of that came a conversation with Brian to work with his organization on this compliance framework, which we'll get to in a minute. But the other one was, hey, do we need a human in the loop? It's not for me really to say. Obviously, I think so. I mean, personally, I'm not speaking for the rest of the industry, but can we have AI front to back on an entire mortgage process? And that's why we commissioned the paper, and MBA supported us in driving ORIC through that conversation and a look at it from a federal lens. What laws were already on the books, and where does AI fit in? These laws that we operate to do are from the mid 2000s. They come out of the SAFE Act, and AI was not really in the mainstream to the point where we were seeing practical applications that we do today.
Yeah, and there's a lot of old laws, SAFE Act, TILA, RESPA, UDAP. They were definitely not built for AI. This question that you just brought up, Dan, is one I've heard people talk about, and that is the possibility of agentic originating a mortgage loan. Last I heard, the MBA wanted feedback from the industry as to what is the level of comfort with this scenario. I can tell you, as a mortgage lender and a proud member of the Mortgage Bankers Association, I don't see how it benefits us to have an agent be able to do a loan from beginning to end, not to mention the part about the consumer experience, right? Because you're not really touching the consumer in the ways that it's going to lead to comfort from, the empathy necessarily that's needed when dealing with a transaction this significant, oftentimes the most significant that a consumer will have. But if you could shed a little bit of light on what you've heard from lenders, what is your understanding of the entire ecosystem's comfort level with agentic taking a consumer from beginning to end, Dan?
Yeah, and I think if you think about the practical application of AI, it started in the right place. It started in the back end of the transaction and worked itself forward. So if you think about how we've applied it as an industry, it's in those areas that is staring and comparing and processing data. And it wasn't really until recently that we started to see it be on the front end. I think from most part, there's been, from certain parts of our industry, there's been a certain attraction to see if we can do more with less. And certainly the largest part of the expense today, I think we'd all say, is probably the sales commission. So, it's just natural for parts of our business to say, well, if we're going to attack cost to produce, maybe that's where we should spend our time. I'm a big believer. I grew up a loan officer, so I'm a big believer that human empathy can't be reframed, especially when maybe you're talking to an applicant that has a father-in-law sitting next to them, and you're understanding, or a father or mom sitting next to them guiding the transaction. How does AI read both of those people? So you can't really understand what somebody's fear and empathy is, I don't believe, using machine learning, but maybe, and there could be some people that believe that is possible in certain transactions.
Well,
it's hard to argue.
It would make sense that the larger lenders, the ones that are more direct to consumer, that have the massive servicing books, it would benefit them a lot more than it would a small lender who makes their mark by being that relationship person, right? Brian, what do you think about that? I mean, you've been in the game how long?
A long time. 30.
How long? How many years?
30. This is my 36th year.
What about you, Dan?
32.
36 and 32, 68, right? Yeah. And yeah. I've been in it. I've been in the business. This is my, I think, 30th year. So we're just under 100 years combined. How scary is that?
Very.
But, Brian, what are your thoughts on what I just said?
So I 100% agree with you that if you think about the largest of the large lenders, certainly those with, a scaled servicing book, anything and everything you can do in that case to retain, protect, refinance, recapture, all the words makes a lot of sense. I get all that. Setting all that aside, there's a single word that's in the SAFE Act, and that word is individual. And so that word individual that references that licensed individual who works for a licensed entity, I can't find a place where a bot, an agent, or anything non-human falls into the category of an individual. And I don't know, Dan, have you seen a licensed bot yet out there? I haven't.
No, in fact, I think we've learned through this process that you can't license a bot because it doesn't meet the definition of what NMLS says is an originator. So, and Brian, you're right. Like there may be an application on certain transactions, but I think we start with the white paper, the definition of what the federal law says today, and we look at frame, which we'll talk about, and building out your compliance side of it. And I think it would be almost impossible to meet the threshold today unless there was a change to realize that. Now, my biggest concern when I started all of this wasn't so much defining this, because I wasn't smart enough to know the answer without the help of a law firm. But if you think about the issue for the consumer, think of it from a consumer's lens. If it's really good enough to imitate a human, if they can't tell, are they being told that they aren't dealing with a human? And if they are they given a choice? Like, do you want an off-ramp today? And that's what I was concerned about really in the immediate past. We held at your summit, we held a panel talking about the intersection of lending and AI and regulation. And the most striking comment out of that conversation for me was hearing an AI, a person that's in that field, say that even the AI designers don't know where AI will be 90 days from now.
And here we are, we're 5 months from there, and it's gone. It's amazing how fast and far it's
reinvented itself 3 or 4 times. So this is a powerful technology, certainly. And until we define what it is that we need in our industry, how can we apply that basically unfettered or unmetered? We learned that term this past week, unmetered in our industry, because ultimately somebody's going to start using it for gain and not for good. And then we're going to have problems.
No, there's a lot. This is very complex. There's a lot to this. Like Dan, you talk about, and Brian, I can't see an AI being an individual. That's true. But things can be changed, right? Yeah. Things are changing constantly. I mean, we're talking about these archaic things in place right now, like TILA, like UDAP, like those things are constantly changing, not to mention the fact we have an administration that leans into AI. We have potentially, the Democrats could be taking over the House, could be taking over the Senate, could be taking over both. We could have a Democratic president in 3 years or so, or 2 years, 2 years, right? 2 years and 5 or 6 months. So then everything could change as well. So it's really interesting looking at this moment in time. But you're right, Dan, in terms of the biggest cost is the originator. And so I'd like to think there's a middle ground here somewhere. I mean, I've long said that paying a loan officer 125 basis points just is not reasonable, and that it should be a lot less, especially when you consider technology, right? And however AI is used, the process should be easier, right? The lift should be less heavy. The loan officer should be able to do many more transactions, right? And so there is a lot at play here. Brian, I want to talk about FRAME here and tell us how lenders should be thinking about this. FRAME stands for Framework for Responsible AI and Mortgage Ecosystem. Where did FRAME come from, and how should lenders be looking at this?
Yeah, so FRAME is a product, if you will, that's been worked on within the MISMO community, specifically inside of the AI community of practice, which is one of 34 active work groups that exist in the MISMO community. And you'll hear me say MISMO community and that word community often. There's only 6 full-time staffers at MISMO proper, but there's 700 plus volunteers, subject matter experts from the industry that make up the community that comprise these work groups that are working on very specific problems. the AI community of practice was the place where we took the problem statement really that came from RESBOG, as Dan had mentioned, being a high priority for RESBOG was creating some guardrails and framework for lenders. And so in that AI community of practice, we had a group led by Rick Hill. Rick's vice president of technology, responsible for the technology side of the industry at MBA. And Rick really deserves a ton of credit for the work on this. He not only did his day job at MBA, but worked tirelessly to get Frame to where it is today, which is version 1. And if we go back to the white paper just briefly, and I just can't encourage folks enough to make sure that you download that paper and spend some time on it. Wherever you sit in the mortgage ecosystem, it's gonna open your eyes to where you should be thinking in terms of risk. But there's 5 primary risk categories or areas spelled out and defined and discussed in the white paper. There's fair lending and bias. All of these obviously are circling back to use cases, AI use cases. Explainability, right? Lenders still must explain adverse actions on loans. You cannot, you can't just rely on a black box decisioning engine. Steering, data privacy and security, and then third-party risk. Third-party risk being the management and oversight you do as a lender on your vendors, platform providers, service providers, et cetera. And where Frame really came into play is when we heard from both Fannie Mae and Freddie Mac, as well as a few of the individual states, where there was some guidelines or guidance given around how they're expecting their lenders or licensees, if it's a state, to not only use AI, but the governance, their own governance of AI. And I think what the RESBOG group recognized was that certainly the largest of the institutions in our industry, they have full-time, chief risk officers and teams and departments of folks. And regulated financial institutions like Dan's credit union have a robust, mature risk management infrastructure. But when you get to the mid, maybe to small size independent mortgage bankers, that risk, that chief risk officer role might roll up to a COO, maybe a president, maybe even a CEO, or it's kind of carved out between those roles. And more often than not, there's not a robust, set of policies and procedures, and more importantly, risk assessment tools to understand where your risk is and then how to manage it. And so Frame was built primarily for the masses, if you will, the hundreds, maybe thousands of small to mid-size lenders in our industry. And we're proud to say it's now available. Last week it launched. We made it available to all MISMO members. And I'm proud to say we have over 500 companies, mortgage companies, lenders who are MISMO members. So,
hey, Brian, you realize there are a lot of people that don't know who MISMO is or what you guys do. I know I was before. I mean, you're a good friend of mine. So as soon as you got appointed as the president, I was all in, right, to learn more, and I have. But there's still a lot of people out there that don't know what MISMO is. And so when you say you've got over 500 members, like if you could do this in 30 seconds or less, do you think you can 30-second or less this? What do you think about that?
I can, as long as you fill in the blank. So timer starts now. Go. MISMO is the Mortgage Industry Standards Maintenance Organization. Everybody knows what a 3.4 is. That is an example of a data standard created within the MISMO community. It's used on every loan. Lenders become members of MISMO by funding through the innovation investment fee. Every lender is assessed 75 cents per closed loan on an annual basis, and funding their portion of their IIF unlocks membership.
That was good. And are you running point on the communication between the MBA and its members? Is MISMO the point guard? Are you like an accessory? Are you someone that's helping to double team the message?
I would say it's a team effort. It is divide and conquer. I mean, the fact that Dan and I are on this together is a perfect representation of how MBA through RESBOG and MISMO come together to kind of build awareness, because this is all about awareness. I I don't want to lose sight on the fact that today 500 lenders are members of MISMO by virtue of them funding the IIF. So today, as a MISMO member, all of you lenders can log into MISMO.org and download Frame and begin to kind of ingest it and understand how you can use that in your business.
Yeah, Brian, when you took over as president, which was about how long ago? Was it over a year ago?
No, it was last October, right at annual.
Okay. So how many members then?
Just under 300, maybe 265, 270, something like that.
And now you're at 500 and you've been there 8 months or so?
Yeah, but it's
Take a bow. Stop it. Stop it, Brian.
No.
Brian.
No.
Shh.
The work.
I'll just say this. You're an incredible guy. You care deeply about this industry. There's not one person that would say anything foul about you. I know I can't say the same about me. However, somehow you're still my friend. You've done a great job, is my point.
Thank you.
And you continue to do a great job. And Bob Brooksman and whoever else was involved in making that decision clearly made the right decision. Dan, I know you agree with that. So what are some of the things?
Before we move on, it's important. Brian has peeled back the veil on MISMO and brought it into the light. He certainly has done that, but make no mistake, and I'll say this for you, Brian, because I know you were trying to get it in. MISMO has been doing great work for almost
26 years.
26 years now. So they've been out doing the stuff behind the scenes to make mortgage work and make all of us work on the same forms. Companies like ICE don't have the success without company or like organizations like MISMO, because they're making that interconnection work. So you have done a great job, Brian, and keep it up.
Yeah. I can appreciate you saying that MISMO's been doing the work, and I know that that's true, that MISMO has done great work. There's a difference between doing great work and raising awareness.
Amen.
Right. And so that is the bridge that Brian built. And he's the reason NFM is a member of MISMO. Prior to that, we weren't. And I'll tell you, Frank Riley, who attends a lot of the MISMO events now, just loves it. It's his favorite event of the year. And so I heard your last one was incredible. People should definitely get involved for sure. Do you have to be a member of the MBA in order to sign up for MISMO?
Nope. 2 separate memberships.
Okay.
While we are a wholly owned sub of MBA, we have hundreds of companies who are MISMO members, but not yet MBA members.
And is MISMO a nonprofit? Did I read that somewhere? Okay.
Yeah, we're the industry's nonprofit.
Excellent. Dan, let's talk more about you. What's going on in the background there? Do you have train? I see maybe potentially train tracks over your left shoulder. You got a TP. You got a baseball stadium. What is going on there, Dan?
That's a workout bench back there.
You have a bench press. I mean, this is one of the most interesting.
Most of these are props, but this is the timeout TP when I'm in trouble. I've been finding myself due to some issues or challenges we've had as a family working from home more than normal. I'm not a work from home person, so I'm living in the dungeon right now at the basement studio, and this is the grandkid stuff. So they like to hang out with Papa.
Well, I didn't want to date you and say, are there grandkids running around? But at the same time, you look old enough to like have grown kids though. So I wanted to stay in between.
I was just complimented we were just at chairman's conference, and somebody told me that I looked better than somebody that's 50 years old. So I'm going to take it, turning
amazing.
In my 60s.
So as you look at the AI landscape, you run the mortgage division for a bank, right? And so and you've been an originator, and you've worn many hats in this industry. You're the chairman of RESBOG. So I really want to know what it's like to be able to identify and recognize things in terms of the lender's cap. And when you think about AI, how many landmines are out there? Like, has this deeper dive made you more comfortable or less comfortable with the dangers surrounding it?
I would say more comfortable. I think there's certainly some real stress for our industry and threats to our industry around, like I mentioned earlier, people designing AI without understanding the complexities of mortgage. I think that's a real concern. And we deploy AI today at the credit union. We have a director of AI. We saw early on in our AI journey that we needed somebody to really look at AI as a measure against our mission statement for our members. in mortgage today, we use AI for a tool for the loan officers so they can search guidelines. We use AI, on an outbound piece, looking for member interactions from our portfolio, and not so much from an origination standpoint yet, because we certainly haven't thought through that ultimately and how we would be compliant there. But I see it as a tool. I see it as a way to better align ourselves for our member needs, to really be more efficient for our member. And ultimately, the goal has to be to save money, whether that be in cycle time, whether that be in making sure that we're putting them in the right product. But ultimately, AI is a tool, not as a replacement for any individual. One of the best lines I've ever heard about AI is that it shouldn't replace people. It should make us more efficient and better, make us better humans. And that's really what we've been focused on.
I think we're starting to see that too in the economy. There's this thing called AI washing, which I've talked about, is when companies are not meeting their numbers and they just attribute it to AI or whatever, and they clear the deck. And I think what we are learning is that it's going to be complementary. It's not going to be a replacement. Is there any one particular thing, gentlemen, that lenders are doing that they need to stop doing right now around AI?
I don't know. Go ahead.
Well,
go ahead.
I would, from me, the optics on LinkedIn is getting out of control. The AI domination in kind of the marketing piece, I can see a lot of different people doing this, and I understand the attraction to it. It's easy and it's fast and it's clean looking. The whole, like, if you equate it to the mortgage industry, the risk to creativity is over, right? Or is there, and is certainly the race to creativity is over, because I can go to an AI generator now and say, hey, make me a song about Puerto Rico and make it sound like this and do that. And then it's taken over the whole internet, and you don't even know that that's not a real person singing that. It sounds so crisp and clean that you're like, wow, that's the coolest song I've ever heard. But no, it's AI. And that's the risk, I think, is losing the individuality and making that human connection in the industry.
What about from, I appreciate that. And by the way, I don't use AI for my posts. I'm not sure if that was like if you're talking about me. I know you're not. I'm kidding around.
I know.
But,
it's
obvious.
Yeah, I'm sure I have people on my team doing it. So
no, it's dead obvious what that looks like. And there's not anybody out there that, is on that platform for any period of time that can't distinguish between the two. At least make the effort to, clean it up a little bit and get rid of some of the dashes and the three, the three sentences back to back to back on that row. But Brian, as it relates to mortgages and to getting in trouble with the government, is there anything you can tell us that lenders are doing that they should really pull back on right now and seek some advice on? Maybe go deeper with MISMO or the MBA to find out if what they're doing is above board or worth the risk. Give me one thing.
I would say, if you do not have a handle on where you use AI, like if you have not done a thorough inventory of your entire company in each use case where AI exists, that's the biggest risk you have. The biggest risk you have, I'm not overly concerned. There may be a few lenders that are really pushing the envelope. Not overly concerned with any one tool at any one place in the process today. What I'm really concerned is at the institution level, when the state comes in or multiple states come in, or should the CFPB kind of get some legs and they come in, or if you're a seller servicer and Fannie and Freddie start doing their MORA audits, and you can't answer the question where you're using AI, you will have a problem. You will have a major problem. And that's if I could point to one tool in Frame that I would say every lender needs to start with is the AI use case inventory. At a minimum, get your inventory in place, and then at least you can go to bed at night knowing what you know. It's the unknown that's going to get you.
Yeah, I want to talk about. Go ahead, Dan.
If you don't think your team members or your employees are using AI, you're dead wrong. They're all using it. And ultimately, if you don't restrict that usage, they could be sharing member data or customer data with a engine that's out in the universe now. It literally, obviously some of these are a little more complex and have some filters in them, number one. And then number two, if you're not setting the risk statement for your team today on the loans that you're closing, you're going to be behind the eight ball, to Brian says, to answer those questions someday. And the states are, they're catching up quick. They're way behind on this. And certainly, you know, we had an interaction with the state legislature, I won't say which one, about a product that was coming out. And I was meeting with another technology company and another lender, and we were talking to the legislator working on the regulator on their policy. And we just asked him the simple question, like, hey, are you familiar? How familiar are you with AI? And he's like, oh, I'm pretty familiar. And we're like, well, have you used ChatGPT? And like, I'm trying to do this with a straight face. The guy says, yeah, oh, well, actually, no, I haven't, but my son has. I've heard really good things. And, you know, so that's where the frame of reference was with the person that's going to be judging your AI. And ultimately there's a big gap there, but they are catching up quick, and they are learning quickly about where the pitfalls are.
So I had James Brody on one-on-one last Monday. You had huge shoes to fill, and I must say you both are doing incredibly well. He was talking about,
it takes our 4 feet to fill his 2 shoes, I guess.
Yeah.
Yeah, that is true. I'm not one to talk about feet. I'm a size, I can't even tell. I'm so embarrassed. I can't even tell you how small my feet are. But he talked about vendors and how you better know what your vendors are bringing into your ecosystem, because the lender could be liable. Like this, to me, my head wanted to pop off here, because how many hundreds of vendors do we have? What is
our
responsibility? What's our responsibility, Dan, as lenders, to know what our vendors are doing as it relates to AI?
Go immediately, leave this call, go Google Fannie or Freddie's policy and AI. And the responsibility is not just with the company, not the vendor, it's the company, but the senior leader personally of that division and of the company are responsible for your actions in AI. That's their policy today. It is literally a complete hammer of the situation. So that certainly is the issue. And Brian talked about, and I'm not picking on IMBs. Certainly we're a small credit union, so everybody wears many hats. But in a lot of cases, it's usually, if you have an Encompass admin, that's the person that's vetting the vendor. You don't have a process if you're medium sized. And it wasn't that long ago that even sized companies like myself really weren't held to a standard.
Right.
You can't trust the vendor to tell you they're all good. You just can't. You getting their SOC 2 doesn't relieve you from liability. You literally have to go in and find out what are you doing with the data? Where does it go? Who has access to it? Do I get it back? You have to ask all those questions, of which Frame will drive you through that and is a great tool to get you through that process. It's a pain for somebody that's built their career on sales. Vendor management is serious business, and you have to be after it. And that's where you'll get in the biggest trouble, is you'll get a vendor that doesn't have mortgage complexity built into their system. You will get pretty far down the road and realize you've just subsidized or subjected all of your applications to maybe a privacy law violation.
And so is that the biggest danger, is consumer data getting in the wrong hands? Is that what I'm hearing?
I let Brian rank them, but it's a big one. Number one.
Well, I mean, I'm trying to put my finger on what this thing, because people talk in a lot of generalities about, can't do this, can't do that. What are we trying to avoid, Brian? What is like a mistake that could really put you in hot water?
Yeah, I mean, I think it seems like there's not a week that goes by that you don't hear about a data breach with hundreds or thousands of consumers' data being exposed, and then, then they track it back to what's the root? Well, it might have been a vendor, that the platform provider that had the breach, but every client of that vendor now who put the customers in there is really, they're equally at blame. So I think the headline risk is definitely around, data privacy, data security, data breaches. But as I mentioned, we've got all these issues around steering and all the existing fair lending regs and laws that we all have to abide by as a lender. And so all those current regs and laws are still going to be applied. And now you have to think about where the tools that you're using that have AI embedded could potentially, cause you risk in those areas. It's a little bit of a new frontier.
Let me pivot for a couple of minutes to address Dan. You are the chair of RESBOG. I believe your term, is it coming to an end here soon?
October.
So,
yeah, Shanna Arrington's the vice chair. She will be installed as chairman in October. Yep.
Yeah. Well, first of all, thank you for your service to the industry.
Yeah.
You know, there's a lot of traveling involved, a lot of meetings, a lot of things you have to do. So tell us what the experience has been like.
You know, it's funny how you find yourself in these things. I mean, one of my goals in my career was to be on RESBOG. It wasn't to be the chair of RESBOG. I saw that as an opportunity to give back. CMB was number one, RESBOG was number two. And the opportunity for RESBOG didn't really come when I wanted it to come. You know, it's so much a timing scenario, kind of where you are in your career and when you can get back. So RESBOG was important for me, and getting on RESBOG was really cool. The leadership role was a complete flabbergast. I could not believe that that was an opportunity afforded to me. And what I've come to understand is that if you're engaged and you share your thoughts and you're meaningful at this, you can get in leadership positions in any organization, and MBA is one of those that do that. So I've never been shy to kind of help and offer my help, and certainly offer, I don't even want to say opinion, but certainly I think my superpower, if I really talk about myself for 1 second here, my superpower is connecting with people and really bringing everybody kind of to the middle. Not so much like the polars and living on the, you know, the right or the left, but really getting anybody to the middle. And that's probably why I've had some success in my career. And I think RESBOG was no different. So, but being in RESBOG and getting involved in leadership has been such an eye-opening experience to me to understand the different needs of servicers versus title companies versus IMBs, credit unions, big banks, big IMBs, and understand how they kind of all play in the same ecosystem, but all have differing opinions of how we should do our business. And RESBOG is built by segmenting them into one group, putting us into a committee or into a room and trying to come up with what's best for the industry. And boy, it's been a busy year. You know, we've had, there's always this long list of priorities that the MBA has, and certainly the industry needs from year to next. And rarely do we get to finish one in the year. And AI was kind of one that we at least could say we got to phase one of the game or finished a full quarter. And I think we're in a good spot to move that forward.
Yeah, another one was the single file credit score. Are you guys still? I mean, are you working on other things right now, and you've kind of said what you have to say, or is that still something that you guys are, you know, wanting and trying and believe that can be pushed through?
Yeah. So as part of the affordability priority that RESBOG has, single file was something that RESBOG voted on and approved last year. Really, and I think that's moved to the advocacy phase now. So if you think about, you know, just continuing that conversation around credit score modernization, certainly Vantage scores in that conversation, FICO 10T, moving to the next level. We just heard from Fannie Freddie recently about some of that work that's going on, not so much to single score, obviously, but around Vantage and understanding that pilot seems to be going pretty well. And we're excited, you know, certainly from that standpoint, to continue to modernize credit and have the conversation about really saving not only consumer money, but overall margin in the industry around credit. You know, one of the things we don't realize is that nobody charges for a pre-approval today. And only about 32% of all pre-approvals end up in a closed loan before that credit has to be repulled. So 70% of those don't get reimbursed. We literally just had an applicant that we were trying to get approved on a bond loan that required us to pull a tri-merged, obviously, to get that to run through the engine. So we were, you know, I'm going to use round numbers just based on, you know, everybody's experience is a little bit different, but let's just say we charged a 2-person tri-merge report, a couple $100. We had a what if simulator that ran, and it said, hey, if you do these 12 things, if the consumer goes and does these 12 things, they can increase their score enough that they'll get more favorable pricing, and they'll do this. So we did it. We told the consumer, hey, go do all these things. They come back and said, hey, you need to rescore the credit. Now I've done all these things, so we have to go pay to rescore the credit. Greg, we were at $1,100 in credit fees to take this application at a chance at the lottery to see if we can get this loan to close in that 30%.
That's absurd.
Before I can even charge the consumer. So, and that's in the name of low to moderate income and putting a first-gen home buyer in a home. So I believe that the warranted conversation in credit modernization has to happen. And the reason we got that high is the data was incomplete in a lot of areas, and we're paying high dollar for an incomplete report. So we can certainly go through all of those things, but I don't think whether we go from 3 to 2 to 1 is the issue. It's modernizing a process that hasn't been touched for over 40 years.
Well, and there's no reason why the consumer should not own their credit report. The fact that somebody else can make you pull your own credit score multiple times as you go from lender to lender, that's the biggest injustice to me in credit. But before we let you go, you know, in your role, you end up in some pretty powerful rooms. And I know that, you know, you've been in some powerful rooms. I think you were in one with Director Pulte, you know, not too long ago. What was that experience like, to find yourself in a room so powerful? What did you think of that moment?
Well, surreal, I think, is probably the best term I can come to. But once you realize you're in the room, they're just people, and they're really looking. They may have different motives. I can't speak directly. I didn't have like a direct conversation with them. We certainly asked some questions, but Director Pulte seemed, the day that I met him, very engaged in the current administration's objective of home ownership and lowering the cost for the American consumer. I met with Secretary Bessent, which was mind-boggling. I've never been to Treasury before, so from a little kid from Brown City, Michigan, going all the way to the Treasury team was pretty cool. You know, I gotta lie, I was like a kid in the candy store. I was looking for the gift shop on the way out. I was like, how do I find that? So, but it is pretty interesting. But once you're in it, and you kind of get past the nerves, it's just a conversation. They really do want to have a conversation. And I actually, you know, if you think about GSE reform come up, and, you know, while the MBA's position is that, yeah, we should continue to work toward the goal of independence at Fannie and Freddie, it's not the number one issue today. You know, certainly it's something that another long-term issue that we have to do. They're still, their capital rules are still not where they're supposed to be. But I actually said to Scott Bessent, which afterwards I was like, what was I thinking? I actually looked at him and I said, hey, as far as GSE reform goes, I said, you know, my opinion is if it ain't broke, don't fix it. I said, we got bigger things to fry. And he just looked at me, he said, okay. You know, they're just people and they understand. And certainly they're as much as we politicize all of that, they really are looking to do a good job.
Yeah, and there's a reason that you were in the room and others were in that room, because you all collectively represent our industry, and you're the experts that day. You're certainly more expert on home ownership, home financing than those two gentlemen that you just mentioned. So I think, to me, it's encouraging to see those doors get open, and those leaders in our government listen to the experts, in this case from our industry. And I want to say one more thing about RESBOG. I served when I was at Flagstar back in 2015 and 2016. And Dan, I would be curious from your perspective, serving on RESBOG, not just as chair, but being in RESBOG, has it made you a better mortgage banker?
Yeah, it's certainly given me a breadth of kind of view that helps me be a mortgage banker. I understand the why better. Certainly being part of the conversation, there's an adage, you know, you'd rather be at the table than on the menu. And certainly understanding how the decisions get made and being in those rooms certainly help. I felt the engagement in RESBOG this year was off the charts. That was, you know, partly induced because I've asked for it. I've asked for people to be more engaged, and called them and emailed them and said, hey, I need you to speak up in these meetings because we need all opinions there. But it's really the speed at which our business is happening today too. So yeah, I'm pretty proud of what we've done this year, and I'm certainly I'm not off. The RESBOG term continues. It's just I won't be in leadership.
Yeah, well, I appreciate both of you and your time today. This has been very, very valuable, and I'm
sure
you know,
one more point. I'm sorry, Greg. The reasons those doors to Pulte and Bessent are open are the work that the MBA does. And the MBA is no stronger than its collective membership. So if you're not, and this isn't, nobody told me to do a commercial today, but I'm telling you, if you're not involved, get involved. And if you're going to go to one conference every year, one conference outside of MISMO, I would go to NAC, National Advocacy Conference. I would put your suit and tie on, and I would walk the halls of Congress. And while the idiotic behavior we see on both sides of the spectrum both sides of the spectrum. I don't care what your political affiliation is today. If you take the time and walk the halls of Congress, your faith in humanity will be restored. I do it every year because it fills my personal bucket. I have and will and have paid my own way to go to that conference. It's the cheapest one MBA puts on. Certainly go and understand how our Congress works, because the people sitting in those offices, your senator, your representative, they're there to serve you. And I think that's how mortgage business really gets done.
Yeah, that was around 60 days ago. There's another great one coming up. You know, if I had to say go to one conference all year that the MBA puts on, it would be annual.
Yeah.
So, I mean, that's another thing. We definitely want people to come to that. Not to mention that the parties that Stan Middleman puts on are just epic. Katy Perry. 2
I
years
saw
ago.
the lineup this year. It's big. It's big. So
Hey,
And it
don't
was,
sleep. Don't sleep
I
on.
can't say it, but yeah.
Don't sleep on the MISMO summit in late August in Reston, Virginia. For those in the DC area, we hope to see you.
Hey,
all
that's
there.
me, man. That's where I met you. I met you in the DC area. Remember that?
Right. I do. I have that
Yeah,
picture
look at us now.
right here.
You guys are pretty good at this. I think the three of us make a pretty good trio. You think we can get
Right.
maybe approval from the NBA to make this a regular thing? What do you think?
Heck yeah.
I'm free will. Listen,
Yeah.
Greg, thank you for everything you do for the industry too. Yeah, listen, you're out front. You're making the conversation happen, and we appreciate that.
Of course.
That's how we get better every day. So
Yeah, I need to become a little bit more refined. I've been
working for that Uber ride too, or whatever the car ride.
I've been working on refining my approach, Dan. Just if you can let Bob and Pete know that.
Softer, gentler.
Yeah. Less hit pieces, more, you know, they say God gives you two ears and one mouth. I'm trying to use these more than this. So, or, you know, I guess this is this for me. So,
No,
yeah. I often find myself handcuffing myself so I can't do any damage. But no, in all seriousness, we're members of the NBA. We never question that. Where would this industry be without it? It's never personal when people when I disagree or criticize, but there's a lot more to commend than there is to criticize by 100 times. The criticisms stand out more, but you guys are doing incredible work, and I really appreciate everybody there. It's a great organization with a lot of people that care deeply about our industry, and this has been a wonderful conversation. Dan Sugg, thank you so much. Brian Vieaux, we'll talk soon.
My pleasure.
All right, enjoy your Monday, everyone. So long.
Yep.